Hey everyone, this is DayTraderRockStar, and this is, this is probably part of the HPS watch list going out for next week. I always do a video, but it's midday here, and on Friday, we got Jeff and Charlie on the mic. I'm doing my research, and we just had a, what we call a tradeometer sell signal. It's right up here in this box here, and you've heard me talk about the tradeometer. If you're a member of the site, you definitely know about the tradeometer and the Algo X and the other indicators here on the indicator pack, but just paying attention right now to the tradeometer because we just had that overbought level. The market has been extremely bullish last 2 days with some data points coming out of the ECB. We have the rate cut, we had the stimulus program, and then today we had a jobs report, which seemed to be positive. And the market continues to push higher. So, we ending off this week on a positive note. Now the day's not over, so we'll see if we get any selling at the end of the day. But I just wanted to touch base. We just did have an oversold level, and I also wanted to jump on the mic here and kind of go over a couple of the setups that I wanted you to see. The first one here is Disney. The news is out. The news is out, and the market is grinding higher. And a lot of people are looking for a top in this market. So when they start looking for a top, that's almost a sure sign that the market's going to push higher. So let's see if we actually push higher. When you're looking at the tradeometer, just a little key for you: determine the trend. When you determine the trend, let's say the trend is up, you want to buy the oversold levels. The trend is down, you want to short the overbought levels. That's where they had the momentum here. We have a couple new additions to the tradeometer. Now we've set up the price. So the price now, and we're going to eventually add this to a chart, and you're going to be able to see these things, maybe even eventually automate the trading off of these levels because they're such great levels. So again, you can see the tradeometer. It triggers the overbought level, and it'll mark down now what level that is, and this is 47.50. So that was a big improvement. Something I wanted to see on the tradeometer, and kind of be able to take this data now and kind of put this data on charts and use the data in different ways. The fact is, the market is very strong today. It's a Friday. It's a Fed, or it's a jobs day, and some cases things will not play out as you want to have a nice organized range-bound market. Or if you have a very trendy market, you're only certain of the indicators are going to work. You want to be able to buy the pullbacks on a very bullish market. Well, here is one. I just want to show it to you. We did get one. We had one over here. We could go back now, and you can actually, I just started this up, so it doesn't load the old ones in. You have to have it open. It's important to have the tradeometer starting at 9:30 so it records all the levels, and you can go back and back test it yourself. So that's it. Just a little update. I'm going to pause this, and I'll probably catch up on it because I want to just do some notes and stuff. But one of the things I was just going to mention is, of course, the MDRX. MDRX is one of the best bets for the week, and this was a lane divergence, so it was very important to see this play out. And I am very happy with that lane divergence. Here's the lane divergence: the lower lows on the price level and the higher lows on the stochastics, and that usually gives us a little. I've seen this so many times that I'm not worried about the sideways consolidation. I know that we consolidate a few days. It usually takes a couple days, and then boom, we get that pop out. Next target's going to be up here against that 200 period moving average, which brings us right up against that 1560 to 1570 level. And then, of course, we have the upper trend line, which is in that same zone. So definitely expecting some more upside, but we already had a good pop on it. You have a profit on it, and I would consider this a positive trade as we got through that 20 period moving average. You can see that 20 here. We have a hard time getting through it. So expecting this in volume picking up. I hate for this to happen on Friday because they have, I'd love to have this happen on a midweek basis where you can start to see some scans go out overnight. People start to look for stocks, that are technically moving higher on volume. This might be something that shows up on one of your scans. If anything, this is the key right here: the stochastic divergence, the lane divergence, and again, action today. So we'll come back. I'll pick this up when I see something interesting, and we'll continue on with this video. Alright, so I'm back here with you, and this is after the market now. Ended up the market kind of went sideways. The last time I left off, we just put in this overbought level on the stochastics. We kind of chopped around here, and it kind of drifted lower, and then we got an oversold level. And what's interesting about this, yesterday I was talking about the bullish, the bullish market we were in. Really, the bullish trend, the uptrend, the strong upside pressure that continued to push us higher, and you could feel that in the markets. You could just feel it. And when you know something like that's going on, you have a trend day, then it's very easy to trade one side of the indicator. The indicator really, kind of gives you a time frame, multiple time frame indication of what's overbought and what's oversold. But on trend days, of course, the overbought will stay overbought and the oversold will get oversold. But if you can recognize that trend, that first overbought, say we're rallying and we're kind of grinding higher. If we get oversold, that oversold level is a tremendous high probability setup. Normally, I say this thing performs well over 75% of the time. If you have a trend day and you take that pullback on that uptrend day, the odds go up here close to probably over 85% of the time you're going to get that initial bounce. It's a fantastic thing, and over the last 2 days it's been key. So this is really the first pullback we did see. We go back here, take a look at the thing, and I wasn't in for the early part of the day, so I wasn't really tracking this until I started the video here. So this was really the first pullback I've noticed. I didn't go back and look at it, but now I just also want to announce something that the reason I'm talking about this. Remember, I was saying, well, how do I backtest this? How do I know that this is working? Well, we make it very easy for you now to backtest it, and soon it's going to get even easier. What we had done, it was kind of a wish list of mine, and Paul got right on it, and I'm so happy to get these indicators to print out the levels, the numbers that trigger at the time. So now the only thing that has to be, these have to be plotted on a chart, and all of a sudden you'll have the automatic indications on the chart. So this is just the next step of the development of this, because you're going to see the tremendous results from the tradometer, algo X, the breathalyzer, and the tachometer. There's indicators that you use along with this, and it's just great because a lot of people don't have the breath in the market, and the tick here, it's a good indicator anyway. But the top two here, right here, the tradometer and algo X, both timing mechanism. So when they both line up, they're great. But again, the tradometer is going to give you great short-term opportunities in this market, and that's what we're concentrating. So now we have it plotted out. So even at the end of the day, if you just keep this running, and you have to keep it running, if you turn it off, it's going to reset at 0. So let it run. 9:30, you could go back and then just plot it out. Say, all right, here was a tradometer. I keep on saying tradometer, it's tradometer, but I get it fooled into saying the tradom. Forget it. You know what I mean. Anyway, you got the numbers there. Next level, we're going to start plotting them on the chart, and after that, it's just a home run. It's automated trading off of it. But I don't think I would ever automate trade off of it, because there's certain conditions you don't want to trade. And again, understanding a trending market and a very bullish market, you want to take those pullbacks. Then we had an oversold level here, and look at the move from there. Even though this was at the end of the day, shoot through to new highs, right up to 1950. It was just classic Friday action, and we closed right on the highs again. So let's just talk about the markets now. I mean, serious. Let's just talk about it. Stop. We really got to stop looking at why the market's going up and where the market's going to stop going up, and kind of embrace it. Embrace the market going up and saying, what happens if this is the norm? Now, I know we have great guests on all week, and we have market analysts come on, and we hear them on CNBC, we hear them on all the tubes, and when we point out the levels in the market, and that's good. And I have a great trend line up here, which brings us up into that 1960 area, give or take 3 or 4 points. And I can definitely see that playing out. That's 1960, because that 1950 is here now. Next level, and closer and closer we get to 2000, and we're going to look back and we're going to say, well, 2000 is crazy. But this is a new norm, with the markets being controlled by the Fed, the ECB now taking action to do the same thing. I mean, the world market's in sync. The argument is this a good thing or a bad thing? I'm not worried about that. I really don't want to be worried about that. I mean, I want to be aware of the situation, but I'm not going to, put my beliefs over the market. If the market's going to continue to go higher, and the psychology of the market, well, the psychology of the market is, well, when everyone starts talking negative, then expect the market to kind of be positive. And when everyone's positive on the market, expect the market to be negative. And that has to come at the extreme levels. So where everyone's looking at this 1960 area, yeah, we could easily get up to there. But my guess is we get up to there, so many people were looking at this as a pullback, and I would too. I think that's an excellent area to look for a pullback. But I would not be surprised to see the market just feed on those shorts that get up there and kind of capitulate to the upside a little through that trend line and get us up a little, even a little bit further. And that's probably going to bring us up closer and closer to 2,000, and people are going to be talking 2,000. So it's going to be hard to time the top in this market. And I've actually taken a few shorts this week. And it's probably the most shorts I've taken all year. So, I feel like, yeah, there might be an opportunity here, but I also understand from my experience in the market, if you do believe something, and something's about to happen, most likely it's not. And most likely, and sometimes it's better if you look back at the mistakes you made in the past. It's just step aside, lighten up, let the things play out. You don't have to be the psychological, the emotional effect you get for not calling, will pass in a day. You don't have to say everyone's expecting they're going to be missing the top or they're going to be missing. I'm more worried. I'm more excited or more worried about people saying I'm missing this ride, because this market, like I said, if this is the norm, and we're at 2020 by December, and then there's something else coming on. I mean, honestly, who's to say? It's the people who get on in the media who really make the levels that other people read and analyze. But really, do we really know what the true valuation of everything is, and all these formulas and all these data points that come out? Is there a something set in stone that the boat is going to fill up with water, it's going to sink? There's a scientific, there's something scientific about certain things, but I know there's no science to this right now. The game is changing, and I think we just have to focus on doing what we're doing, and what we're doing is great. We're seeing the momentum, we're seeing divergences, we're combining things, and we're going on a shorter time frame, and we're locking in profits, and we're taking profits, and we're moving up. This market, I think, is actually great for the investor now. It is. It's very easy to come into the, after seeing a week like this and a week like last week, and so it's very easy to say, oh, you know what my watch list is? Just take 5 longs. I don't care what they are, and go on vacation, come back next Friday. That's never works out, especially. But it almost feels like that. It almost feels like, when are traders, or actually when are our our aunts and uncles, brothers and sisters, I should say, get back involved with the markets? Does the market become a place where you can actually make money again? That was my big concern, is seeing how the market's acting these days, but the lack of confidence and the lack of participation. The volume is lower. So everyone I've talked to, and just talking random, kind of off the record talking and, just chatting and stuff, people who are involved in the market are actually, they want to see the volatility come in. They want to see the market kind of get hurt. Because that's one thing is where, that's when traders got involved. That's where people got in, that's where money came off the sideline, and they knew there was an opportunity there. And probably a lot of you got started too. A little after 2008, you might have got interested in the market. I know a lot of people on the site have. So we need that. We need that. I don't know how that's going to happen, but we need that to get interest back in the market. Because right now the market continues to go higher and higher. People don't believe it, but it will continue to go higher and higher until that tide, turns and there's some positive action out there, and people just can't wait to get in the market. Then maybe we'll see. But anyway. I'm just doing some news right now, part of the watch list. I see Carl Icahn taking a 9% stake in Family Dollar stores. So anybody holding Family Dollar out there, it's at $67, almost up like $6-7 after market. All right. So going into next week, there's not much to say, Yeah, are we going to get up to that 1960 area? This trend line is pretty good. I measured it out pretty good. It's just a basic, pivot area up here and a pivot area here and here and here. And it's hard to say we're going to get there or not. We're extended on the daily. We're extended on the 60. I mean, there's not much you could even look at here. It's just about it's a waiting game, and you can still feel the strain. I'll tell you what. Start off Monday, and again, it still kind of looks strong. Again, concentrate on the tradeometer on the oversold levels. The market starts to sell over and roll over, and you start to see it fail a couple of times under the 200 period moving average. Start to look back at the tradeometer. See, follow it. See if it's getting, if it's flushing through some of the signals on the oversold level, but they're nailing it on the overbought level, because the overbought level would be those bounces and the downtrend. Hopefully we just have consolidation, and that way both levels will work great. You'll get the overbought levels and you get the oversold levels. Overbought, oversold, and you start just to rack it in that way. All right, so that's a little bit of the tradeometer. Again, don't forget to check it out. And for those out there who don't have it, I advise you getting it at the the introductory price. There's already been some great improvements and additions to it. Not even improvements, but it's great as it is. But we're going to continue to upgrade it, and you lock yourself in. We're going to be raising the prices in about a month, I would say. We have a couple more upgrades we want to do on it. And the people are locked in for life at the price they get in at. But you're going to see some great things come from that. So that's that. And then also, great appearances this week by FT71, and I want to give him a shout out with his great levels. The levels work great this past week. And again, for those out there interested in trading the futures, which the tradeometer is great off of, it's probably perfect with the futures. Well, there you have your FT71 stage 5 trading. You can't go wrong there. The great Dom they have, and he's on, and it's very easy. It's a total package there. So big shout out to FT71 in stage 5 trading. And on the other side of things, of course, the sure trader. Unrestricted, no pattern day trading rule. You could get in and trade the SPY, the future, any of the ETFs off the tradeometer, in and out, 6-to-1 margin, great setups. So definitely try that out too. Support our partners. And about to kick off with this week's watch list, which is a good one. I actually have 1, 2, 3, 4, 5, 6 potential shorts on it, and some other ones I've been posting all day in the room. So let's get to it right now.